Okay, let's dive right into this analysis of Rezolve AI. We're looking at a series of really unusual market signals that have led one analyst to believe a major stock move could be just around the corner. They're actually calling it an almost perfect setup, and we're going to break down exactly what they mean.
So, it all starts with a puzzle. You've got this small artificial intelligence company, Rezolve AI, and its stock just surged on a day with absolutely no news. To make it even weirder, the rest of the AI sector was falling. So right away, you got to ask, what in the world was driving the stock? And, what might some Wall Street insiders know that we don't?
All right, first up, let's really unpack this strange surge. We need to understand the market behavior that made everyone scratch their heads.
To really get the picture, you have to realize this was not a good day for AI stocks in general. Rezolve's peers, companies like BBAI and SoundHound, they were mostly trading down. The whole tide was going out for the sector.
And yet, while all that was happening, Rezolve AI just shoots up over 14%. I mean, that's a huge move on any day, but it's especially bizarre when there's no press release, no company announcement, not a single official peep to explain it.
So there it is. That's the core mystery. If it wasn't official news, and it clearly wasn't a sector-wide trend, what could cause such a big jump? Well, the analysts behind this thesis decided to start peeling back the layers of the onion to find out.
And that brings us to the main clue they found: some really unusual activity in the options market. This is often where you see the so-called big money, the informed investors, placing their bets.
On that very same day, 4 highly unusual trades were placed by what looked like institutional investors. And listen, these weren't small bets. We're talking over $500,000 in total, and every single dollar was betting on the stock going up. For a smaller company like Rezolve, that is a massive signal.
Now here's what's so fascinating about these bets. Look at the details. They're all call options that expire next Friday, super short term. They're betting the stock will hit $5. But get this, for these traders to just break even, the stock has to rally about 43% from where it is now. That's not just a hopeful bet, that's a bet on a huge, incredibly fast move.
So, just to be clear, what is a call option? It's not the same as just buying the stock. It's basically a leveraged contract that only pays off if the stock price goes way up, past a certain point before a specific date. It's definitely a high-risk, high-reward way to bet on some serious upward momentum.
And this chart really tells the story. It shows the open interest, which is just the total number of active option contracts. Look how concentrated the bets are. That bar for the $5 strike price for next Friday's expiration has 32,000 contracts open. It just blows everything else out of the water. This tells you that for these traders, $5 is the magic number.
Okay, so this intense focus on one options contract isn't just a signal. It can actually become the mechanism that drives the stock price higher. It sets the stage for a potential chain reaction that traders call a squeeze.
Now, this chain reaction often starts with something called a gamma squeeze. Put simply, for every person buying one of those call options, there's someone on the other side, usually a big firm called a market maker, selling it to them. And to avoid losing a ton of money if the stock soars, these market makers have to buy the actual stock to cover their risk. And that is what can create a really powerful feedback loop of buying. So here's how that feedback loop actually works. First, let's say the stock price starts creeping up toward that very popular $5 strike price. As it gets closer, the market makers who sold all those options, well, they get nervous and they're forced to buy shares of the stock to hedge their position. But that wave of forced buying pushes the stock price even higher, which in turn forces them to buy even more shares. You can see how it becomes a snowball effect that can make a stock's rally accelerate very, very quickly.
And that's not all. This whole thing can get supercharged by a second phenomenon, a short squeeze. This one targets a completely different group of investors, the folks who have bet against the stock. If the price goes up fast, these short sellers start losing money, and they get forced to buy shares to cut their losses, which, you guessed it, just adds even more fuel to the fire.
And as the analyst behind this whole thesis points out, these two forces, the gamma squeeze and the short squeeze, they often don't happen in isolation. They tend to work together, hand in hand, and that combo can create a truly explosive rally.
So we have the clue from the big money, and we have the potential squeeze mechanism. But, this is all just theory without some kind of trigger. Well, the analysis points to a whole series of events next week that could be that exact trigger.
So check out this timeline. On January 11th, Rezolve is presenting with Microsoft at a huge conference. Big deal. Then, on the morning of the 13th, the company is holding an investor call to update its revenue guidance. Now, they don't have to do that, which kind of suggests they might have good news to share. And at the exact same time, the whole market is going to be reacting to the latest inflation data. That is a very, very dense few days of potential catalysts.
Okay, so when you pull all of these threads together, the strange bets, the squeeze mechanics, this packed calendar of catalysts, you really start to see why the analyst is calling this a perfect setup.
This whole bullish argument really rests on these 5 pillars. First, you've got the clue, those huge bets from the big money. Then you have the fuel, a really high number of short sellers who might be forced to buy. You've got the mechanism, that potential for a combined squeeze. You have the spark, all those catalysts happening next week. And finally, you have an amplifier. This stock is still kind of under the radar, which means a rush of new buyers could have a huge impact on the price.
And what makes this whole setup even more interesting, at least according to the analyst, is that it's all happening while the stock is trading around $3.60 a share. That is way below Wall Street's official price targets, which range from $7 all the way up to $15.
So in the end, our goal here was just to break down the argument being made. Is this a really sophisticated, calculated bet by informed insiders that's about to pay off big time? Or is this whole thing just a market mirage? It's a fascinating setup, and I guess next week, the market itself will tell the tale.